Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. People are living paycheck to paycheck today. Doesn't matter how much you make. I'm going to show you why that is coming to a head right now. That directly connects in with what the Federal Reserve is panicking about. I've got all of that and more. Let's begin by taking a look at Jamie Dimon. He says, brace yourself for an economic hurricane. He has said a lot over the years, but I think it's important to suggest that this is actually the case. Why? Because the storm is coming. Look, 1/3 of Americans making $250,000 a year live paycheck to paycheck. This is important. Why? Because it's not just people that are making the median salary of whatever it is, 34,000 or so. It's not just that, it's everybody. Why? Because if somebody's making 34,000 and they get a raise and suddenly they're making $60,000, what do? Do they live within their means? Do they live below their means? No, they buy the BMW, they buy the new house, and they continue to do this over and over again. Why? Because they have a job, because they keep getting a bonus at the end of the year, because their stock market is going up and the real estate is going up and so on. So that allows this to continue. But what happens when you have a crisis and everything starts to spiral downward? Then we have a problem. You see, this is what's going on right now, and this could change everything. Take a look. This is from the Fed. I'm going to talk a lot about the Fed here today. In May, the Federal Reserve published a report on the economic well-being of American households in 2021. This survey is infamous for revealing in 2013 that half of Americans couldn't cover a $400 emergency with spare cash. You remember that? Okay, I've covered this all the time, not just from the Fed, but I have shown you over and over and over again all these different surveys that basically say the exact same thing. It's 200, it's 400, whatever the number is, it's generally a low number. And how many individuals are reliant on that steady income, or else everything gets turned upside down? Well, we saw that in early 2020, how that was a very serious problem. And now today, here we are again. These cycles, between 2020 and now, it happens to be short. But what happened in between these 2 years? Just a bunch of stimulus. Let's be honest about it, okay? It's a few shots of espresso, but the espresso runs out. The solution to the housing crisis? Living with strangers. Now, on a complete side note, this picture just looks strange to me. I don't know. Let me know in the comments what you think. It just looks odd. But anyway, in the article, they're basically talking about different people's experiences and what they have to do. So and so has to live with so and so, and they didn't know each other, but through this connection, they figured it out. And one pays $800 a month, the other one pays $900 a month, and they live together. And they talk about co-op housing, where 16 people are living together. What about when I showed you people living in pods? Yeah, they don't need a house. Everything's all good because the World Economic Forum and all that. Yeah, I get it. But this is just showing us how far we are willing to go. But nobody wants to address the 800-pound gorilla or the pink elephant that's in the room. And what is that? It's the Federal Reserve. It's the fact that the government as well pumped out all of this stimulus. You can't get away from it. When you do these activities, it has to come back around to haunt you. Missed payments, rising interest rates put buy now, pay later to the test. Affirm, Afterpay, Klarna grew rapidly during the consumer spending boom. Investors have concerns as outlook looks cloudier. And obviously this happens to be the case when you have rising interest rates. When you go from basically zero to a reasonable rate, you've got problems. Now, if it comes back down to zero, that can have a stimulative effect, sure, but it depends on what's happening with the consumer at that moment. If they are worried about the future, they're going to say, you know what, maybe I'll just hold off for now. Okay, this is the former New York Fed president, William Dudley, also known as Bill Dudley, said that the U.S. central bank will keep raising interest rates to curb high inflation, dismissing the speculation that it will hold fire in September. Now, I actually like the former individuals better than the current, because the current, they've got to do the whole, song and dance. But former, they seem to be a little bit more, outspoken. The Fed is pretty convinced that they need to go to something close to neutral. The notion that at some point they are going to take a pause and look around, of course, that's going to happen at some point, but it's going to be driven by the economic data. So we're going to see what happens. I just thought it would be important to bring that to you because it's a prominent individual. Now, this is a huge article. If you have the time, read this one, link in the description under the sources. And if you appreciate this content, simply hit that thumbs up button. When you do so, you notify the algorithm. This guy's got some good stuff, so I appreciate that. What the Fed's QT means for that $2 trillion pile of cash. Now, they get into everything in here. It's just really, really long. But you can see they get into all of the details, including where did all this money come from. You could see the stimulus. You could see the quantitative easing and what they did. What about the money held by short-term investors? It gets into the money markets and why they want that to go up and so on. This was interesting because it talks about the reverse repos. You remember that? That's right. Reverse repurchase. Look, money funds can park up to $160 billion a piece and earn 0.8%. That's more than approximately 0.7% for a 1-month treasury bill. So people were asking, why would a bank want to do a reverse repo? Why would they do this? Well, you can see if they want a short-term solution to where to keep their cash, they can do so and earn 0.8%. There are different reasons for it. I believe the risk is a big reason. Now, the Federal Reserve, my friends at the Fed had this to say. Did I say my friends? Janet doesn't work at the Fed anymore, but you know how it works. Anyway, totally off topic. The Fed does this thing called the Beige Book, and essentially just gives you insight in the different Fed regions, what's happening with the economy. And the most recent one had a few things to say, and I'll show you that. Prices. Most districts noted that their contacts had reported strong or robust price increases, especially for input prices. So that's what I want to highlight out of this. And what does that mean? Look, when you've got, let's just make something up, you've got lumber. We saw the price of lumber going up considerably. That's an input cost for the cost of construction. So what does that do? Well, now you want to buy a house. Well, it's going to cost you an extra, let's say $40,000. That's huge, right? We saw that. By the way, I'll show you in a second here, lumber prices have gone down again, but that's besides the point. When input costs rise, they pass that on to the consumer, whether it's buying a house, whether it's a cell phone, whatever it could be, okay? Then we have this. Beige Book instances of slow. And this shows us that the Federal Reserve and everybody they're speaking to is talking about a slowdown. This is how you know something's going on. Now, they're not going to necessarily, tell you what the history of the Fed and, the Jekyll Island. No. But we do get some insight as to what information they're receiving. Doesn't mean they're going to act on it or what have you. But anyway, Beige Book instances of slow. Look, this chart goes back to January 2020, and we haven't seen the term slow. Think about that. 2020. So all throughout the whole lockdowns and everything, slow is now the big term because it's a slowdown, because this is a recession. Here are some of the best places to find yield for your cash. So in this article out of Bloomberg, they're talking about some different options, high yield savings, yeah. But one of these, and by the way, I mentioned this, so if you're not already, Twitter, Instagram, TikTok, I posted this already. I'm always faster on those because I can get that out to people much, much faster. One of the things that, and by the way, at the Money GPS, one of the things that they discussed in here was I-bonds. So if you look at that, I think it's right here we go. I-bonds, one of the most popular options this year is in the usually sleepy world of cash-like products. And you can see that right here. It is, by the way, from the US Treasury. People were asking me, where is this from? I don't trust it. It's from the Treasury. Anyway, so you can see it's 9.62%. There you go. outpacing the official inflation rate of 8.3%. So if somebody, and by the way, capped at $10,000, but for some people who are just investing in, whatever, some paper assets or whatever, it's probably better to own something that's outpacing the inflation rather than not. Okay, you can always sell it. Bank of Canada unveils another half-point hike and warns of more. That's right, Canada did it again. Now, what's interesting about this is that these central bankers know exactly what's coming. They know that a slowdown is coming. And let me pull out the highlighter for a second here. Okay, and let me just, maybe if I do this quickly, just to show you what it's at right now. Okay, so it's at 1.5%. And keep in mind, 2010, so like financial crisis, they brought interest rates up to 1%. Here we go, all the way across, right? You see that? Then we enter into the spirit, oh, we got to tighten our belts. Yeah, sure. We're almost at that level. So the interest rates right now today, and we have a lot more to go, are at a level that, the highest they've been essentially for a very long period of time. So I am interested to see. Now, what's important about this? You know very well what's going on. There's going to be a slowdown. There's going to be a recession officially. So we know that these interest rates have to get up higher in order to slow down that inflation because they're going to have to cut. I never denied the fact that they're going to have to cut or they're going to have to do more quantitative easing. But first, they need to create this cycle. They create the cycle. I don't know why I have to keep seeing every day that people just still deny it. Look at it's happening right now. It's happening right now, and yet people are denying it. You increase, you collapse, or you crash, or you have a soft landing. How often does that happen? And then you reverse, okay? And at the bottom, that's when certain people buy in. Anyway, so the central bank knows all this, and they know what's happening, and they are creating this very cycle. Mortgages are the big deal, okay? You got houses in Canada that are literally the entire economy at this point. And what happens when suddenly people can't afford to pay their bills because mortgage rates have gone up considerably? You might be thinking, no, they've got a mortgage for 25, 30 years. They don't need to worry about that. Not the case. Because in the US, it might work that way if you have a fixed interest, but not in Canada. You see, between 3 to 5 years, and then you've got to essentially refinance. That's it. So what happens? So, maybe they got that 5 year and they just got it last year. And so, who knows where interest rates will be in 5 years. That's not the point. That's not the point. The point is that there's a lot of people who are going to have to refinance at a much higher rate. And I highly doubt if they're worried about a $400 expense that they're going to be able to pay their $1 million mortgage. Just wanted to show you this. Lumber is the cheapest in 7 months as the housing markets soften. So you could see that this is going on all over the place. What we are watching right now is a slowdown taking place. This is the demand destruction that perhaps they want. You could argue that. And we will see what occurs, but the cycle is on today. If you appreciated this information, simply hit that thumbs up button. I would like to thank you for doing so. It's right down there. And I want to ask you, if you're not already, to become a subscriber here on the channel. If we do this, and if we try real hard, we can hit that 282,000 total on the subscribers. It's 282,000 maybe. Can we get there? Wait, are we there already? Yeah, but it's perpetual. It's all good. Anyway, just a little bit of an inside joke. I'll see you on the next one. Take care.